Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is Friday, February 10th. The markets just closed. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How you doing, Barry, after a very nice week?
Doing pretty well. Doing pretty well. Can't complain.
Yeah, we got a full show this week. And the theme as I try and, as I'm reviewing the charts, I'm open to what the charts are telling me, and the charts this week were telling me the waiting is the hardest part. So we're going to review some charts where we're still waiting, some charts where the waiting's about over, and some where the waiting has already paid off.
Mm-hmm.
So we're going to look at the 30-year bonds, wheat, corn, soybeans, natural gas, cotton, cocoa, and coffee. Barry, you're going to do your normal big five, which is ES, gold, crude, bonds, copper, and the dollar and the euro.
Yep.
So it is a very full show. And let's start off with Bitcoin. And the thing to point out here with Bitcoin is
half square held is what happened.
It did its job, right? In
Yep.
other words, it doesn't have to always hold it down, but it did its job, and we knew that this was a decision point, right? We were either going to get stuck under it, like we did, and sell off, or we were going to clear it, check back, and then go.
Right.
So this is the beauty of the squares, is it gives us, we know those points where there needs to be a decision. And this was a decision, and we see what it was decided. It's sold off. So now we're going to watch and see, do we make a low here on the full square? Do we make a higher low above the square, showing it's a little more bullish? Or do we slice right through the square and get stuck below? But for now, the weight of the energy is to the downside because we failed at that half square. By the way, all these levels for the squares and all the markets we cover, like even the ones where we're not covering them on the show, but we cover them, they are on a Google Doc spreadsheet, which when I post the link to the weekly video, I'll also post the link to the spreadsheet. Anything else to add, Barry, other than we're coming into this support here? A couple previous levels here that pretty good support.
The support looks like we're probably going to go down and test the full square.
Mm-hmm.
And, that would make sense because that would give us a little bit of a false break under that little spike day before we broke out.
Right here.
Yeah.
Mm-hmm.
And if that goes, where it's going. So,
exactly.
We got a lot more to go if that line doesn't hold. So.
Amen to that. Let's jump in because I know we got a lot to cover. Let me flip it over to you and let's see what the week had for the big five. Right into support, didn't it?
Well, it's doing what it's supposed to.
Yeah.
Right into support. All right, you guys, just to catch up from where we left off last week, we were looking at this 4140 was like the key level to watch because we were going to treat that level and the quarter square as an area, decision point, like Ben always says. And we were also looking at this high for a potential false break coming off of that. And we got a little bit of everything.
I was going to say, you got it all.
You got a little bit of everything. So first of all, we couldn't really hold. I mean, we spiked up there, but really couldn't hold above 4140. Went back, for one day, reversed. Here it was really interesting because we, on Tuesday, we had a high. Wednesday, we had an inside day. And soon at that low of that inside day got taken out. This is classic charts, right? As soon as the inside day got taken out, we started selling off and it continued on into today. And we had this 4038 down below. We had the 60-degree square. We were looking for that to provide some support. We were looking at the 4050 area to provide some support. And we pretty much got that. We found the resistance right at the 4176 area, which is let's say 4179, right in there at the quarter square. Also lined up, we had this 90-degree timeline here in
Mhm.
price. I don't know if it's easy
Mhm.
for you guys to see that. Maybe I'll change a square here. So we were up for 3 months. And if you guys are wondering why I'm not using the spike, all the cycles lined up to the first one. So normally I use that,
Mhm.
and it normally works fairly well. So
Yeah,
anyway,
because you see the false break is not a real move, right? That's part of the reason why you look at putting it on where the
yeah,
other low was?
some false breaks are kind of like a ghost. It's like a ghost
Mhm.
bar, and there are times when the false break is, let's just say it's real,
Mhm.
not ghost. But
Mhm.
it's hard to tell. It depends on the volume, and it probably has some other components that I'm not aware of. But either way, what I do is I check both, and as soon as I understand which one has the traction, then I just go with that.
Yeah, and then this one gives you a beautiful fit because you had a reaction at the 45 and
Mhm.
we're getting a reaction at the 92.
Exactly.
Mhm.
So it's good.
Mhm.
Anyway, I am going back to the 60 because we can see a little bit more detail and it's just a nice vibration of the 90, so it works out. Going into next week, boy, it's a really interesting time. You could say that every week, but no, not really.
Right, right, right.
Because you only get these timing points and certain price and time connections once in a while, and this is one of them. So we looked at the 90 days here, 90 bars, right?
Mhm.
And then we have 45 degrees here from this low going into
Mhm.
the same high. This would be 45 degrees, meaning you can say calendar days or you can say solar degrees.
Mhm.
Either way, we have that here. We have 112 coming off the false break. So we had a lot of stuff coming up here, and I was looking for a false break, and we kind of got that.
Mhm.
But I want to jump to the weekly chart. This weekly chart. I don't think we've looked at this, but let's take a quick look. Here, what's interesting is this is the square of square of 81. It's a vibration of 72, 144, and this is one of the charts I watched just to see how things are setting up. And I saw this working when I saw the high come in, and that's when I set it up. And of course, when that other low came in, it was right on it.
Mhm.
So now we're at the 50% of the square. And if we don't clear this, it's definitely weighing towards softer market conditions. And I think it's something that we ought to probably pay attention to. And you can see, the 81 worked really well because if you go from the high, we went down exactly half the square,
Mhm.
right? So everything's fairly tight. A half square is still the same because it's the same square. Maybe I'll just keep it here for now. So this is one of the weightings, meaning we have an inside bar on a weekly basis, and we close kind of weak. Yeah, it's above
Mhm.
these highs, but it's not exactly closing on the highs. So this is, for me, this is some kind of an indication to watch when these kinds of things set up. We rallied up into 50% of the square, and 50% of the move, basically, roughly, right?
Mhm.
and and then we have an inside bar on weakness. All right, so you have to say, check. We got to check that
Yeah, yeah.
box. And here, this is the normal weekly that we look at. It's the square 52. We came down square and a half here, and this move was legit. It was good. It measured out nicely to past moves. We talked about
Mhm.
that back in the days.
Mhm.
And now, this 4,000 becomes really the key because that's pretty much where the 52 degrees come into. And so
Mhm.
far we're holding above it. Now I can, of course, change the square, move it around, and probably make a case, why the market is weaker. Okay. But
Mhm.
the job is not to make a case for what I think, but just to kind of observe what's happening. And here the 52 square is doing a good job. So I'm not going to move it around, but you saw this is 52, and 54 is a vibration of 72. Then we have 81 on the other chart. So they're all kind of telling a story. and I think it's, given the time and what's happening and what's in the air, it's something to pay attention to. So we came up to, we can just say a quarter of the square, right? So we're up 3/4 going into 50% retracement. All right. So that's not bullish. That's
got to clear it if it wants to be bullish.
That's right. It has to clear it, and clear it with some, some kind of some inspiration, right? So for now, yeah, it's holding above the 60-degree mark, around above 40, let's say 40-40, 40-50, that area. But but in the bigger picture, I'm seeing these other things setting up, and I see this first false break here. The fact that we took out this low, I mean, that kind of clicked in the false break into place. So yeah, if you just look at this, you can say, well, it's above 60. It looks kind of bullish. All right, fine. But there are things setting up that you really have to pay attention to. So for next week, if we take out this 40.38, I think we're in trouble. Market's going to be in trouble, and we're probably going to go test much lower, much lower. So this is the thing we're watching next week. It becomes another 100-point spread that we're watching, right?
Yeah, 41.40 on the upside.
If we break the 40.38, let's say 40.40, it's going to be, I think we can expect some weaker conditions. If we happen to get above 41.40 and we can settle above that, which we really couldn't except for one day, that happens to be a false break the next day. Then I think, well, okay, all the, that would take care of the weekly things, all these little suspicions and little red flags that we're seeing will all be turned green if we can settle above this.
It's interesting, Barry. I've been talking all week, last few weeks, last month really, with followers about this. If you look at just looking left, we've been in the same range since April or May.
Yeah, exactly.
And what I've been talking to them about is, everyone's looking for either like a melt up or a crash. What if we just expand the range and trade two-way for a while?
Yeah, exactly.
I mean,
it's definitely do that.
And you go back and look at the 70s, you look in the 60s. I mean, there was a decade or more of that sort of price action. So it's something we have to really think about is take your profits when you're profitable in the range, and don't try to get this big killer move either on the upside or the downside, because it might not happen for a while.
Right. And there are plenty of times in history, I got to change the scale if we go to that far back. But
right.
Oh yeah, we could certainly do a wide range. I mean, we're already doing a wide range.
Yep.
For a couple of years, right? So starting, really it started right there, in the middle of 22. Well, not a couple of years, let's just say.
They say almost a year.
Almost a year. And we've been in that range. So it's possible that we do that. And
you really got to be tactical when in an environment like that.
For sure. Yeah. And the other thing is we could also trend ever so slowly while being in a big range. So that's something to keep an eye out. But for now, yeah, I think you're right. We could, I could easily see this being trapped in here. For
right. And the moves would be fantastic. Like if you go from that half square to the quarter, what is that? A couple 100 points?
Well, yeah, this is 38.40.
38.40 up to 41 something. I mean, that's a 300-point move.
Yeah. No, there's plenty of picking.
Yeah.
So yeah, let's see how it pans out exactly. But for now, I think for next week, let's watch the 40.38 area down here and 41.40. And it's possible that we, somehow stay within that 100-point range. That wouldn't be as much fun, but let's see. But those are the two levels.
Right.
Not much else to do. But the key takeaway here is, if we take out one of these levels and happen to settle above that, watch out, because that trend could continue, because that's the kind of spot we were in.
Sure.
Yeah. All right, let's move on to bonds.
Bonds were the star this week.
Yeah, bonds did fairly well. And well, what can we say? We talked about this 132. We've been talking for a while, and it held. And the next call was really, talking about how this 129.5 area, this area holding, and if it doesn't, that we're probably going to visit the full square down at 123.5.
Mm-hmm.
And well, not only did we break that, we went back and tapped it just perfectly right on the line.
Yep.
And
close the week on the lows.
Yeah, so that was kind of a gimme. I remember I think I messaged you right at when it was tapping that and going, "Hey, we're going to sell more here."
Yeah, that's exactly right.
So the bonds are doing, just to say that bonds are doing sort of what we're expecting, and I would expect this low to be tested.
Mm-hmm.
And how soon we do it, I'm not so sure, but that looks like the direction for now. Yeah, because we didn't even get close to this half square.
Nope.
And couldn't really hold above the quarter, so it's not a lot of strength.
And that false break in the middle high there was the perfect tell right there.
Yeah, that was a pretty good false break.
Mm-hmm.
All right, moving on to the weekly. Weekly bonds. Well, you guys, it's pretty much the same story. We had these equal moves that we talk about every week, being that sort of completed that the reaction. And bumped around a couple of times just to get everybody on the wrong footing.
Right.
And here we go.
Yeah.
So we're looking for lower, and this 114 looks like a really good target at some point, because that would be 144 down. And boy, that's a good number for the bonds. We'll see how that works out. So
and the setup is in for a fast move too, Barry, because it's like a setup for a 3 on both the weekly and the daily.
Yeah, it could be a fast move.
Yep.
Crude, well, again, pretty much like we talked about last week, it really didn't do much other than, for short-term trading, it's good. We came off at 73.5 nicely, and now we're rallying. So hey,
it's trapped in the Barry Vice range.
Yeah.
The 10-point range.
10-point range that we have picked out. And it started forming up here. So, and now it's in place. And breakup, that's going to be good.
Big move. Yeah. Big move.
So that was 240 bars coming into that low, 73. So for next week, well, what else to do other than looking for the market to test 83?
Mm-hmm.
Now we have a lot of overhead in here, so we'll see how 83 goes. And we might yet have another trade to the downside. We might have another one.
Yeah.
Why stop now?
Yep.
Let's see how it works out. For now, it's trapped in the range, and here are the numbers, 73 and 83.
It falls perfectly in our theme of the waiting is the hard part. You got to wait.
Yeah, you got to wait unless you're taking the short-term trades, right?
Correct.
And looking at the weekly crude, pretty much the same story. I mean, it doesn't take a lot to figure out, hey, this is this is kind of 1 week up, next week down, right?
Yeah.
What's going on? But you know what we always say about silent markets. You always got to watch them like a hawk, because at some point, things start to change. So this 45 I've been using, but I jump around and look at other squares when it's appropriate. And when it came to
60, nailed it.
60, it nailed it perfectly. So I think we ought to probably watch it on that level.
Mm-hmm.
And also I saw a square hit just about perfectly. Let me see what that was. It's a 45 that I was using earlier, remember? Mm-hmm. So anyway, we had this high come in, and we can see how the half square holding all of that really nicely. So, and if you look back, you can see, it's kind of an important level. If you just look at the cursor and go back, we're catching all these highs, right?
Mm-hmm.
And we're kind of getting into the meat of this sort of price action here. So this low is really important, I mean, anybody can sort of figure that out just by looking. But if you look at the geometry and if you look at the squares, it's kind of an important level to watch for a break. Now, we don't want to really see a break, this breaking, because if it does, it's probably going for a kill.
Mm-hmm.
And well, it'll be great afterwards, and it'll be great during, but that's the thing to watch here, okay? Because we do have this triangle forming, and I don't think it should be ignored especially on a weekly chart. See that?
Mm-hmm.
Can you see that?
Yeah.
Okay.
Mm-hmm.
Maybe I should highlight it a little bit.
No, I can see the triangle very clearly.
Yeah, yeah. So that's the thing. It's setting up in a way we really have to pay attention now. It is not the time to fall asleep. And yeah, it could go a couple of more weeks, but this is the thing to watch. So you got to watch the highs here, and you got to watch this week's low for any kind of price action beyond those. Other than that, I would expect it to sort of stay within, just as it's kind of showing on the daily chart, because here's the boundary, right? So here's that triangle that we're seeing, these two lows, and up here, this line. All right, let's move on to gold.
Mm-hmm.
Gold is also performing nicely.
Yeah, you nailed that high.
Yeah, the high came in, well,
90 by 90.
Man, you can't beat those, right?
That's beautiful.
That's like the D square.
Mm-hmm.
And well, when a 90 comes in, it doesn't just finish in a couple of weeks. So I think there's more weakness in gold.
Mm-hmm.
And a test of this 1814 area would be ideal to set up for future growth. Let's just say future.
Mm-hmm. Yeah.
So that's kind of what we're looking for. I mean, gold's really held up well through all of this. And so we have the boundaries now. And this would be good trading within the square. So for now, it's on the weak side, and we'll follow it through like that.
Yep.
Mm-hmm. And looking at the weekly gold chart, pretty much the same story. We saw, I mean, here's that box we've had for a while, and it's big time resistance. So it was really, if we're going to really make a run for new highs, we really had to settle above 1919, and that would have kind of locked in a new target.
Mm-hmm.
The fact that we failed that in a big way with an outside reversal and all of that, and getting under 1881. So I think there's further, weak price action ahead. And we'll leave it at that. Not much else to say to that.
Mm-hmm.
And here's copper. There's another triangle that we had that broke out cleanly. This is why we draw them in, people.
Mm-hmm.
Right? Remember that triangle, ascending triangle, right? Boom.
Yep.
Broke out. And we came back to the line, hung in there for almost a week, and we closed a little lower. And we talked about this when this square came in up here. It looks like we're probably going to go and test at least, this 384, 385 level, which happens to be half the square.
Mm-hmm.
That makes sense. It's also pretty much in the breakout territory. So for now, looking for a pullback for the weakness. So this is a good time to look at all your metal stocks, right?
Yes, sir.
Where those lows are going to come in. Weekly copper. Again, the uptrend is good. We have a lot of higher lows going in, and I'm looking at this like a correction within the larger up move.
Mm-hmm.
And waiting for the pullback to finish. And
let's see where that low comes in.
Yeah, we'll use the numbers from the daily. I think this half square is a good area, this 385, 384 area.
Mm-hmm.
Now, and if it gets under that, then of course it's going to be a much longer kind of a correction, but that's all right. Moving on to the dollar.
Not dead yet.
Not dead, not dead. And there's another 90 that kicked in.
Yep.
Very nicely. And I think this low is good, a 90 square, especially, this is a quarter square on the next square. It's pretty good.
Mm-hmm.
So I think it's a go. Dollar looks good. And look, it's 540 from this.
It's good timing.
90 by 540. So it's all pretty good. We'll just leave it at that. I think the long side is a side to work for now. And looking at the weekly dollar, again, we came down to the quarter square, and it looks good as far as that's concerned. And the other thing is, we came up to the 90 here, and here, support is very close to the 90, which was kind of what we saw in the other chart. So it all looks like we could have a low in this place, mainly because of that 90, right? That's important symmetry in time. Let's move on to the euro. Pretty much the same story. We looked at the timing last week, and we were looking at this as sort of a high, and it did square out at some level, and we were treating this sort of like a false break against that spike over here, and it turned out to be correct. And
yeah, it was good.
Turned around, took out 108 over here, and that was it. And that held, it was a solid line before. As soon as we dropped, it started consolidating under that, and it's looking weak. So that could be it. At least, I think it's safe to trade with that assumption. Still a trade, but you just trade it in that direction. And looking at the weekly euro, we have half to half. That's almost 72 degrees. So if you take it down here, I think it's a little bit better, maybe easier to see. So you ran up 72. Well, I think under the conditions, 102 would be a reasonable target to the downside at a minimum. And if we take out 102, 102.3, let's say, then, I think we're probably going to go and challenge the old lows. Those are, I don't think it's going to hold up in the long run. So,
agreed.
And I don't know if we'll get another chance at a high like this, up 72 degrees. I really can't see it going a whole lot higher. Well, it's a 50% retracement. That's what we talked about last time. And that's always a good place to take a shot.
Absolutely.
And so dollar, we're treating, to the upside, and the euro, we're basically trading to the downside. And yeah, that's all I got for this week.
Excellent stuff.
Hey, thanks. And the thing is, things are all moving, and we're coming off of good cycles. If you notice, we're coming off of a lot of 90s, and we're coming off of a lot of price levels. So it's an active time. This is the time to watch. Now, in between 90s and in between price levels, that's when things can get dull, because there's not much to get traction off of. Right now, I'm saying, even though markets might look dull, we're in traction area, so it's not a time to
get distracted.
Exactly. Well said. Anyway, let me put it back to you. Let's cover the rest of the commodities that are also starting to get active. So
yes, sir.
All right. Let's see you on the other side then.
Okay. Bye.
All right, Ben, what's going on here?
It's a bit of trouble starting, it looks like. Well, the reason I say a bit of trouble, the first bit of trouble is we couldn't hold the half square.
Right.
So all week, we were testing and holding. And then Thursday, we closed on the lows through it. And Friday, we added to it. And we're piercing the steep uptrend line that we had in place. So as discussed last week, right, the key spots are this half square, and the half square is at 12,505. So we lost that. We were holding that last week, right? We closed above it and we were holding it. So now we're back below it. So that's the key level we have to break on the upside. And on the downside, it's the full square around 11,900 right in here.
Right.
So right now the momentum is with the the bears. You know, they busted through this little ridge of support that we had. Now we have to see what price is going to do. Theoretically, it could hold in here and just sit on top of these highs over here.
Mm-hmm.
You know, on the 3/4 square here. It's 3/4 square right there. Or quarter square in this place, but in this case, but the real battles you want to watch are if we come back up here and test, if we bounce back up and fail here, then the probabilities get even higher that we're going to have to test that full square. So it's looking weaker. It's looking like something finished up here. Now we watch to see if, it's just a little, ABC pullback like we're seeing here, or do we get stuck under here, meaning it's something bigger going on?
Right.
Anything else to add?
No, that's pretty good. And I think the weakness is going to be real if we can't clear that half square.
Yeah. Yep. That's going to be the tell, is on a test back to here. What do we do?
Mm-hmm.
Failure will be embolden the bears to attack. All right. So let's jump into the commodities. As I said, the waiting is the hardest part, is the theme this week. So let's start with the ones where we've got some more waiting to do.
Mm-hmm.
That's the softs, and we'll start with cotton.
Well, that's a good one.
Here's the waiting, right?
Oh yeah.
But even when it's dull and you're in this grind and you're in this, sort of chop that's frustrating because you can't do anything, what can you notice?
Yep.
Series of
Upside
higher
break
lows
is what I can see.
Yeah. And we have a flat top, right? So the tops are not as, they're not like markedly lower like we're seeing on these lower highs, where we're seeing much higher highs. I mean, much higher lows as we wind up in the triangle. So we wait, but we're watching. Alerts are set, right? For seeing because I want to make sure I'm on top of this when the breakout comes.
Mm-hmm.
And I'll show you why when we get to the grains. But it's winding up. It sucks to wait. We've been in this garbage since November, but the moves out are going to be really, really good. So that's cotton. That's one we're waiting on. Let's go to the next one.
Mm-hmm.
Cocoa. Same story, little higher, little stronger push up, little stronger trajectory on the upside.
Mm-hmm.
It has a little steeper move up than we saw in cotton, but again, it's been triangulating here, and we're getting into the narrow part of the triangle, so we're going to have a decision. The weight of the evidence right now is a break to the upside, but we want to watch it and we want to see.
Yeah. Mm-hmm.
It's been in a longer term triangle too, especially on the bigger time frame. So we really want to let this thing break and then jump on it. So that's cocoa, and look where we're doing it. We're
At
basing
one of your decision points.
a very important decision point, right? We're chopping and just sort of fibrillating right on top of this full square.
Yeah.
So here we're fibrillating and bouncing around the full square, which obviously full squares are important spots, but it's also important from the standpoint of look at where all these highs were, and we're sitting right on top of them.
Mm-hmm.
So we wait, look for the breakout. Taking out this high will signal time to go.
Right.
And that's coffee. Anything else to add on coffee?
Well, be a little patient, and I think it's going to be worth it.
Yeah. All right, let's go to the next one. This is everybody's favorite. There's so much chatter about this one on Twitter. It's crazy. Nat gas.
Mm-hmm.
I guess it's just so enticing when you have crazy moves like this.
Well, yeah.
As crazy as the moves are, they're fairly harmonic. Right?
Mm-hmm.
They respect the squares. They give you good setups. This is another one where we're waiting.
Yeah.
The interesting thing is we stopped going down this week and just kind of chopped near the low, which creates this potential, and I say potential on a lower time frame for a higher low, and then you take out this high here and you got a higher high, and we start putting something together. Until we stop making lower lows, and until we stop making lower highs, though, there's nothing to do here on the bullish side.
Right.
But given the move, given where we are in the bigger picture in terms of support, it's really important to pay attention and see here if we do get signs of higher lows and higher highs on shorter time frames. Anything you have to add here on that, gas?
Well, it's like catching those falling knives, right? You have to wait till it sets up a little bit. It's one thing to get nail the corner, but it's another thing to get the trades on. So,
yep,
I think watch it for now, like you said, and we got plenty of time.
Yeah, and when the setup's there, the moves are spectacular, as you can see, looking left.
Yeah,
and to the downside too. Look at the setup there and the moves.
Right.
So it's just making sure you have a setup. A bullish setup on a shorter time frame.
It's a good support area. If you can go back and look at
as your monthlies and weeklies.
Yeah, exactly. And you can see it's a good area. I mean, no wonder. So let's see how it turns out.
Okay, now we get to go into the ones where the waiting is starting to pay off. Let's look at those. Those are the fun ones, right?
Yep.
How about bonds?
There you go.
Barry talked about bonds. I mentioned it last week. I didn't cover it because he covered it and I had a lot of stuff to cover. But look what you got here. You had a failure with a false break at the half square. Comes back, tests the square and fails, and then look at this week. 3 days we spent, bouncing around that full square, and today it just gave it up. So this could be part of a very fast move. Now, the one caution I'd say here on the higher time frames, there's monthly support, not a half a point below here, 126.15. So watch that area closely. If you're short or considering a short, that's monthly support, full square support. So you gotta see how we react around there, and then you're gonna have weekly support around 125, around this level.
Yep.
So watch both those areas, but this is set up. If by some chance we rally up and fail here, there's your fat pitch. Right? Get caught under that full square. That's the home run pitch. So that's the setup. You already covered bonds. The only thing else I'll add is I was watching high to low and low to high type of timing. Back in June, we did 35 trading days low to high. In October, from low to high, we did 35 trading days, and high to high, we just did 35.
Right.
before this big move down.
Well, that's all inside that square 72. And so yeah, it works well.
Absolutely. So that's bonds. Now let's go to the grains. And looky what Mr. Wheat did today. Boring as hell since December, right?
Yeah.
Chop, 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 chop. Boom.
Yeah, don't forget the false break at the low there.
And of course, we had the false break at the low. Here you had failed at the full square, pulled back, right? Now you set the alarm here. And guess what went off today? The alarm.
Right.
So we got the alarm kicking off, meaning it's time to get involved. We broke out to a new high and took out the full square. 2.5 months of dullness, and one day you get a big move.
Yeah,
I think it was up 4%. It was up 4% today.
It could be the start. So.
Yeah, that's right. It could just be the kickoff. So that's wheat. Let's go to the next one. Corn.
Trying. It's one of the waiting ones, right?
Yeah, this has been a waiting one, but again, today, big move today compared to sort of the last week of bars. Closed near the high. It's been holding that full square support really, really well.
Right.
So this thing, it's further along than wheat, right? Because you can see where, this thing made a low in July, and we've been basing for the last couple months, basically sideways in this big triangle, but we're breaking the downtrend line today. And if we get a follow through on Monday, corn's up and out and ready to go.
Right.
Let's go to the last one. Same thing. Look at that bar today on beans. Closed right at the high. With commodities, it is a really, really important signal because it usually means there's follow through. They were buying into the close.
Right.
Paid the top tick into the close. And again, look, the one thing I'll point to this, and this was an old method, Barry, that you and I used to use, this 3 lines move to show when a trend is really starting to move. And the first line is relatively flat. The second line's a little steeper, and we just got our third line in today, showing sort of a potential takeoff point. So beans, I think the grains all look good, led by wheat today. They all had decent days, and the charts are kind of starting to say in the grains that, we're heading for more food inflation, that these prices should be higher in the not too distant future. So that's it for me on the commodities. The metals, gold, silver, copper, are all correcting. As you covered in gold and copper, silver's in a similar situation. Crude, we're still in the range. So we're waiting to see, us break out of that 73 to 83 range. And sugar is sort of on my watch list for, is it going to start correcting? We potentially had a failed fifth there today with a false break at the high, but we have to just see what the follow through is like next week. Otherwise, the commodities are all in different phases of either near the end of the waiting game, or the waiting game is over and they're starting to move, which is what we really want to see to get involved.
Right.
Anything you're going to specifically focus on this week, Barry?
Well, all the waiting charts,
right,
and the ones that are moving. I think this is what I was trying to tell you earlier when I was finishing up my segment. Like, where you can see how all the 90s are finishing up, all these cycles are finishing up, prices are starting to get some traction. So I'll be watching everything, really. I mean, I can't think of anything that doesn't deserve to be watched next week. So all hands on deck.
Fantastic. I'm on board with you. The commodities are starting to move. So it is really time to set your alarms and pay attention, because as we've seen, when they go pretty fast.
Exactly.
So have a great week, everybody. Barry, have a terrific week. Good show. And we'll see you all next week.
All right. Good coverage, Ben. And everybody, have a good week. And also, we always forget to say at least I always forget to say, if you guys like the show, like our work, please, feel free to click the likes and subscribe, and also share our videos with other traders. So thank you.
Thanks so much. See you later.